Hi, my name is Eileen Mostricht, and today I wanted to talk about taxes on an inheritance that you receive. So when people come and do estate planning, a common comment that they make is that they want to make sure that they're minimizing taxes for their beneficiaries, whoever's going to receive these assets. So the idea that there is automatically a tax on an inheritance that somebody receives, I think is a little bit of a myth and based on a little bit of a misunderstanding. In Florida, an inheritance is a tax neutral event. There is no inheritance tax in Florida, and there is no federal inheritance tax. Some high tax states do have an inheritance tax. It's definitely the minority of states, but a few do. In Florida, they do not. So if somebody leaves you $10,000, for example, in a bank account, you do not pay a tax based upon inheriting that account. If somebody leaves you a house, you do not pay a tax on receiving that house. If somebody leaves you Disney stock, you do not pay a tax upon receiving that. It's tax neutral for you. An exception, though, is an IRA or another type of tax deferred account, like retirement accounts, 401ks, 457Bs. There are several different names for them. But if it was tax deferred during the owner's life, then yes, now when you receive it, whatever you withdraw from it, you are going to have to pay tax on that. Usually that is reported on your income tax return, and then you pay an income tax on that. But for other assets, there is no tax. Now, when you receive the asset and it becomes your own, like let's say the Disney stock, now it's yours. So you go on with your life, and let's say it increases in value, and then you sell it later. Then yes, you're going to have a tax on the difference between what you sold it for and what it was worth on the date of that you acquired it. So that's a capital gains tax, but that's not a tax that's due right when you receive it. It's due later on down the road whenever you sell it. Same with a house. So if you receive a house and it goes up in value over time from the date that you receive it forward and you sell it later, then yes, whatever the difference is, then just like normal, you'll have a capital gains tax. Unless it was your homestead and there was a capital gains exemption, that's something separate. But in general, you're going to have a gain, a tax when you sell it. So I just wanted to clear that up, that in Florida, there is no inheritance tax and there is no federal inheritance tax. There is an estate tax a federal estate tax, and that is a tax on the overall value of the decedent's estate if the estate is over a certain amount of money when they die, and right now that amount of money is around $15 million. So very few people are affected by that, and even if they are, there's a lot of planning that can be done to avoid it. So that issue rarely comes up, and that shouldn't be a concern at the moment for most people.